Hi guys, welcome back to my YouTube channel. My name is Abidemi Abbas, and on this channel we talk about investment, finance, financial freedom for Africans and Africans in diaspora. If you're new to my channel, please click the like button and subscribe. And for my returning subscribers, thank you once again for always watching. So today we're going to be talking about why you should invest in index fund. Index fund is like a mutual fund, an exchange traded fund that is designed to track the performance of an underlying index. So see index fund as the opposite of buying individual stocks. Instead of buying stocks individually, so with index fund, you're not buying stocks individually, you're buying the whole stock market. S&P 500 is all the biggest companies in the United States in terms of market capitalization, and also FTSE 100 is all the biggest 100 companies in the UK in terms of market capitalization. So instead of buying individual stocks, so if you're buying into an index fund, then that means you're buying the whole stock market. In the US, you're buying the whole 500 companies in the S&P 500, and in the UK, you're buying all the 100 companies in the FTSE 100, and in Nigeria, the NSE 30, you're buying the whole 30 biggest company in Nigeria. So that is what index fund is all about. You're not buying stocks individually, you're buying the whole market. So see it as a basket of fruits, whereby you have different kind of fruits in one basket. So you only buy this basket, however you have different kinds of fruits, like different kinds of company in this basket. That is what index fund is all about. So today I'm going to be telling you why you should buy into index fund instead of individual stocks. So there are different advantages of index fund in terms of low risk, low cost, better performance, good taxes, and also a kind of passive investment. So for example, let's look at the cost. So if you're gonna buy Tesla, for example, you're gonna be spending around £1,000. You're gonna be spending around $1,000 to buy one share of Tesla. And if you're also going to buy Amazon share, you're going to be spending above $3,000 to acquire one Amazon share. So for you to have one share in Amazon and one share in Tesla, you need to have above $4,000. That is quite expensive. With index fund, you're not only going to have Amazon, you're going to have all the 500 companies in the United States. If you buy an index fund that track the S&P 500. So for example, you've got the VOO in the US and you got the VUSA in the UK. So these index funds are cheaper. For example, in the UK, you're going to be buying a VUSA for around 60, for a little bit over £60. And also in the US, you're going to be buying a VOO around 400 plus in the US. This gives you exposure to track the whole 500 companies in the United States of America. Instead of spending $3,000 to buy one share of Amazon and over $1,000 to have one share of Tesla. So buying into index fund is very cheaper, and also you have this big exposure to the all 500 companies in the United States, or the all of 100 companies in the UK if you buy an index fund that track the FTSE 100. And also buying into index fund, this is a true passive income. You're not doing anything, you're literally doing nothing. You can put your money, you can be buying into index fund in an autopilot. That is a direct debit from your accounts and buying into the index fund without you doing anything. And this way you can be making dividends from the portfolio without you doing nothing, without studying the market. However, if you're buying individual stocks, if you're buying individual shares, you need to do a market research for you to find that company that is so undervalued. And people do this by using a fundamental analysis or a technical analysis, which most times is not even reliable. Buying individual fund, you're really doing the work. So that is an active investment, whereby if you're buying into an index fund, you're literally doing nothing. All you're just doing is buying and buying and buying. And it is proven to be one of the best strategies in the market. If you look into the historical performance of index fund, most of the times it has a very good performance. So last year I did some experiment. I bought some individual stock using the eToro trading app. Also, bought some index funds. So the performance of the individual stock is around 5%. Meanwhile, index fund was able to return over 20% from December last year to January this year. So the index fund most of the time has a very good performance compared to buying individual stocks. So owning individual stock like Amazon and Tesla can be very risky. However, if you own an index fund, it is less risky in the sense that the negative movement of one company, it's less likely to affect all other 499 companies in the S&P 500. So owning an index fund, you're exposed to little risk. With index fund, you have a very good tax advantage if you have an ISA account in the UK. I'm going to be talking more about ISA account in my other videos for people in the UK. So index fund give you a buffer. So index fund give you that tax advantage, especially if you have the ISA account. So one of the greatest advantage of index fund is compound interest. If you leave your money for a very long time in the market, then you're gonna see the power of index fund. Let's assume you invest £500 monthly to buy index fund with an average yearly return of 8% for the year of 35 years. If you leave this money to compound for 35 years, you're gonna have more than £1 million in your investment account. Now, to me, this is a very good investment strategy, and we've come to the end of my video. Please, if you enjoyed this video, please click the like button, subscribe, put a comment in the comment section below for me to know what you feel and if you have any question for me. So thank you once again for watching. My name is Abbas.